Is your real estate boss mom, Katie Evans, and I am here to break down something that could literally, not even joking, save you thousands of dollars. You really want to listen to this video. So the question for the day is, should you refinance your home? And if so, when and how do you do it the smart way? So whether you're looking to lower your monthly payment, tap into your home's equity, or even ditch that PMI once and for all. PMI, private mortgage insurance. This video is for you, and it is your quick start guide to refinancing with confidence. So let's go and get into it. All right, so let's talk a little turkey here. When does it actually make sense to refinance? There are some real life situations where refinancing might really be a great move. So let's talk about just a few of them, okay? One example, interest rates dropped since you bought. You could snag a lower monthly payment and save big over time. Okay, this has happened. You want to pay off your home a little bit faster. Okay, so you could switch from a 30-year to a 15-year loan, and that's going to help you build your equity quicker and cut down on your interest, and might be just setting you up for a higher monthly payment. But there are costs associated. There's benefits and costs associated to that one. Let's see, your credit score has improved. So let's say when you bought it, your credit score wasn't all that great. Now it's a whole lot better, and you have more buying power, and actually will help you qualify for better loan terms and better loan interest rates than when you first bought. So that's another time you might consider that. All right, another time you might consider doing a refi is that you need cash for some home improvements or some other major life expense. There is such a thing called a cash out refi, which lets you borrow against the equity in your home. All right, the next one is if you are on an adjustable rate mortgage. These are called ARMs, not my favorite. You might want to refinance out of that ARM into something that's fixed, just to give you the mind that comes with locking in that stable fixed rate. It's not going to go up in the future. All right, and the last one where it might make sense to do a refinance is when you are paying the private mortgage insurance, so PMI. You guys, if you've built up enough equity in your home, refinancing it could help you get out of it. If you're in a loan product that requires it for the life of the loan, you could refinance into a loan product that doesn't require it for the life of the loan. And that is also going to drop your monthly payments. So now that we know why you might want to do it, let's talk about why people refinance beyond just the lower rate. Okay, here are some of the outcomes of refinancing and maybe what it'll do for you. So lower your monthly payments. Oh my gosh, that's going to give you so much more wiggle room in your monthly budget. That's kind of a nice thing to have. A shorter loan term. So like if you switch from a 30-year to a 15-year, that's going to get you mortgage free a whole lot sooner in your life. Now I do have a little trick around that I'll share with you at the end, but it requires a lot of self-discipline. Another reason, access to home equity. Extra funds are, like if all of your cash is located in your house, those extra funds for renovation, tuition, consolidating debt, that's all a really good thing sometimes to use those funds for. With lower interest costs, even by 0.5% drop, it can lead to massive long-term savings over the life of that loan. And then of course, more stability, okay? If you switch from an ARM adjustable rate into a fixed rate, oh my gosh, that gives you so much stability, so much like just breathing room in your head. I love it. So all this sounds really awesome, right? Okay. However, there's a little bit of a real estate boss mom reality check here coming for you. So prepare yourself. This is when it's coming. Okay. Refinancing is super powerful, but it is not always the right move, you guys. There are some potential pitfalls, and I want you to pay attention to the pitfalls. Okay. When you first bought your house, you had what are called closing costs associated with the loan. When you refinance your house, you are most likely going to have a repeat of those closing costs, again, associated with the loan. Those can sneak up on you. Appraisal fees, loan origination fees, and more. So we need to always make sure that we are taking those into account when we're talking about your break-even point. All right, another potential pitfall, try saying that 5 times fast, is If you are extending your loan term, like meaning you were 5 years in, you refinance and start all the way over again, now you've got a new 30-year loan, okay? It might mean for you that you're going to pay more in interest over time. Even if the monthly payment is lower, that interest accrues over the entire life of that loan, okay? With a cash out refi, that's going to lower your equity. That's going to lower what you have available to you in your house. So if home values drop, you could end up underwater in your property, all right? And the last one I want you to consider is whatever you're refinancing into, does it have any prepayment penalties? Yeah, there are still lenders that have those associated with their loans, and I don't love it. But if you pay off that loan early, are you going to get dinged for it? That's always in the fine print, and I don't love it. So make sure we ask about that. So how do you make sure that you are doing this the smart way? Let me walk you through it a little bit step by step. Here is how you're going to refinance like a pro. Number one, get clear on your goals. Why are we doing this? Do you want a lower payment, faster payoff, equity cash out? Know your why. Number two, check your credit scores. The higher your credit score, the better your rate is going to be, the better the terms of the loan are going to be. If it needs work, I want you to hit a pause button and focus on that improvement first. Number three, this is the time to shop around. Shop your lender, okay? I don't want you to just say, our favorite lender from before, this is what they're offering us. Shop around. I will recommend on a refinance that you consider a credit union. A lot of times they will have some of the better rates. So don't assume that your current lender is going to do you the best deal ever. Get multiple quotes, shop it around. Number four, run the numbers. What is your break-even point? All right? If you're planning to move in 2 years, refinancing might be a really, really bad idea. So understand what your goals are, what your time frames are, and then run those numbers so that you make sure that you're making a smart decision for yourself. Number five, get your documents ready. Yep, it's like you're starting all over again. Pay stubs, U-2s, bank statements, tax returns. You're going to need them all again. So let's make sure we gather those together so we can do this quickly. Number six, apply and lock your rate. Don't forget, interest rates, they're bouncing around all over the place all the time. So if you found a deal that you like, lock it in. Lock it in as quickly as possible before your rate shifts again. All right, and then you lose that deal. Number seven, close the loan. Review all the final documents, make sure everything is right, pay any of your closing costs, and then boom, you're done. That is how you refinance like a pro. All right, refinancing certainly can be an incredible tool. So if you know how to do it wisely and if you do it correctly. If your head's spinning a little bit right now, that's okay too. Don't worry, that's what I'm here for. Now, if you have gone through this whole entire process in this whole entire video and you've said, but I've got this great interest rate and I don't want to refinance, but I do want to get my mortgage paid off quicker, can I do, Katie? I have got a great pro tip for you. All right. You know how twice a year most people who are on a paycheck get an extra paycheck? Why don't you throw that extra paycheck at your mortgage payment twice a year, or even just a small portion of it? By paying down the principal, even just twice a year, even just one extra payment a year is going to cut years off of your loan. Run the numbers. You're going to be blown away by how that works. Okay, so try that out for me. Another pro tip, if you don't want to do that, round your payment up every single month. So if you've got an $1,800 a month payment, round it up to $200 or to $2,000 a month. See what that does for how quickly you can pay that off too. Those are just a couple little pro tips. But if you're wondering whether now is the right time to refinance or not, whether you'd benefit from a second opinion, then let's chat. Let's just chat. I have a lot of great lenders that we can shop, we can talk to, we can get all kinds of professional opinions for your specific situation. All right? So reach out to me today. Let's connect. I'm going to get you with a trusted lender who's going to be able to answer some questions. Actually, I'll get you with a few trusted lenders. And then you can decide whether or not refinancing is the best option for you and is going to help you get to those long-term financial goals. So, as always, this is the Real Estate Boss Mom helping you own your home and your finances with clarity, confidence, and just a little bit of sass. All right, you guys have a great day. I'll catch you on our next video.